Dirty dealings, corporate battles, consumer woes. This is Evening 5. Poultry stocks fell in active trade after Berjaya said it was considering removing the subsidy for eggs. Teo Seng Capital led the decline, dropping over 10% to RM2.20 after more than 5 million shares changed hands. Leong Hub International, the country's largest poultry company, slid by 2% to end the day at 73.5 cents. Louis Lau, head of research at Malacca Securities, told The Edge that the sell-off among poultry stocks might not necessarily be related to the statement, which was made by Datuk Sri Muhammad Sabu today. He said since eggs are an essential item, ending the subsidy wouldn't likely lead to a significant fall in consumer demand. On the contrary, he noted, this could present an upside potential, boosting earnings for poultry and egg companies. He added that the appreciation of the ringgit against the US dollar, which reduces input costs for chicken feed, would have a more significant impact on poultry companies' earnings. He believes the sell-off in these stocks may not persist. Bernama reported earlier today that the Ministry of Agriculture and Food Security is currently reviewing subsidies for all three grades of chicken eggs, in a move that could save the government 100 million ringgit per month. A proposal has been submitted to the Ministry of Finance and the Ministry of Domestic Trade and Cost of Living. MMC Port Holdings is said to be considering an initial public offering that could raise up to 7 billion ringgit, which would make it Malaysia's biggest in over a decade. Citing people familiar with the matter, a Bloomberg report said the port operator, owned by Tan Sri Syed Mokhtar Al-Bukhari, is working with financial advisors on plans for a first-time share sale that may take place as soon as the second half of 2025, as that MMC could be valued at 24 billion ringgit to 27 billion ringgit. Deliberations are ongoing and details could change. The company, part of MMC Corp, runs 7 ports along the Straits of Malacca, one of the world's busiest shipping lanes, and is the biggest such operator in the nation. It also operates 3 cruise terminals. MMC had looked into listing the port unit in 2018 and 2020. Global infrastructure partners had also been exploring an acquisition of up to 49% of the port operator, but shelved the plan earlier this year on valuation concerns. Souqa Fintech is considering taking legal action against HeiTech Padu following the latter's decision to terminate the deal to subscribe to new shares in the fintech company. HeiTech's unit, Synergy Grade, on Monday aborted a plan to acquire a block of shares equivalent to a 30% stake in the pay halal operator for 16.17 million ringgit. The proposal was announced by HeiTech's board on Bursa Malaysia 10 days prior to that on September 27th. In a response to The Edge, Souqa Fintech Chief Executive Officer and indirect largest shareholder Patrick Thevaraja said the termination had caused irreversible damage, loss of opportunity and affected Souqa Fintech's reputation. According to him, the official reason given to Souqa Fintech for the termination was that there was no board approval for the deal. However, he said HeiTech's company secretary had given Souqa Fintech both HeiTech's and Synergy Grid's board resolution extracts and share subscription agreement. He told The Edge, Souqa most likely will opt to sue to set the record straight and seek justice. Berjaya Food said it has inked a master franchise agreement that would allow the company to exclusively operate Paris Baguette stores in Brunei and Thailand. The company has plans to open an unspecified number of stores across both markets by the third quarter of 2025. Berjaya Food said the expansion also reflects its commitment to establishing a stronger footprint in underserved markets, tapping into the rising cafe culture in these nations. The latest agreement comes as Berjaya Food pushes for international expansion and growth of other brands, amid pressure on its key Starbucks franchise in Malaysia. Berjaya Food launched Paris Baguette in the Philippines in April and its second store in September this year. It currently has 8 Paris Baguette stores stores in Malaysia and 2 outlets in the Philippines, and has inked a deal to operate Paris Baguette in Singapore. Berjaya Food is also exploring new opportunities to introduce other international brands under its portfolio to global markets as part of a broader expansion strategy. The current portfolio of Berjaya Food includes Starbucks Coffee, Kenny Rogers Roasters and Krispy Kreme Donuts. Emerging company Crest Group ended its maiden trading day on the ACE market flat at 35 cents, unchanged from its IPO price, giving it a market capitalization of 303 million ringgit. The counter emerged as the second most active stock on the local exchange today, with 114.8 million shares exchanged. It traded between an intraday low of 35 cents and a high of 40 cents during today's trading session, after opening at 39.5 cents. Based on its IPO price of 35 cents per share, a net profit of 20.1 million ringgit for the financial year ended December 31st, 2023, the group's price-to-earnings ratio stood at 16.6 times. Demand during its IPO was strong, as its public tranche was oversubscribed by 73.88 times. The Bumiputra portion was oversubscribed by 53.41 times, while the public portion was oversubscribed by 94.35 times. Crest Group raised a total of 82.11 million ringgit from its IPO. Shares set aside for eligible persons, Bumiputra investors and select investors were fully taken up.